Can we not talk about Greece for the next few months? Are we almost there, Matina, Stevis?
Well, I think we are almost there as far as the markets are concerned on Greece. I think after the next few weeks, the Greek story will really be a drama for Europe and for its own people. But I don't think it'll be grabbing our attention that much in terms of market news.
Right. Now, you have an excellent piece out on the WSJ.com website, site, in which you say, Matina, this is the largest sovereign restructuring of debt in the history of humankind. Did I get that right?
In the recorded history of humankind, that is exactly right. So yes, it's, Greece is restructuring 207 billion euro in bonds. That is the largest in history. It's also a lot of other bad firsts, including the first in an advanced economy that's not related to war. The last one was 60 years ago, and it was related to the Second World War. And it's also the first in the history of the Eurozone, the currency bloc in Europe. So it's a pretty big deal.
Right. Now, the markets, though, rightly or wrongly, seem to be welcoming that a deal finally got done. Italian and Spanish bond yields fell again today. They've come off quite a bit. The U.S. stock market and the European stock markets all responded very, very positively. Will this saga, if you will, have a happy ending, or is that still to be determined?
I think that's still to be determined, but it's the completion of the Greek restructuring certainly feels like kind of symbolic end to the acute phase of the Eurozone debt crisis. The Eurozone, the market for Eurozone debt will never be the same. The markets know that, creditors out there know that, and the member states, the countries, the 17 countries know that as well. But it feels really like we are putting symbolically, we're drawing a line under the really acute crisis that we've been in for the last year and a half or so.
Right. Now, Matina, you say the markets will never be the same. And in fact, what the Greek sovereign debt crisis showed us that the market had been misinterpreting or mispricing the individual sovereign debt of individual nations, in this case Greece, but also Italy, Spain, a bunch of the weaker credits. They were pricing it for many years as a European credit as overall, as opposed to an individual credit. So while you say that it may never be the same, isn't it true that in past restructurings, like in Argentina or with the Soviet debts and later Russian debts, the markets in time came back to lend money to these countries on favorable terms? The market does not always remember what's happened in the past, does it?
Absolutely. No, you're absolutely right. And we saw Argentina return to the market, Brazil, and other countries who restructured their debt. However, I think my point more was that a lot of people are talking about the losses imposed on private sector creditors, the haircuts, and the pain that will be felt after this restructuring. Some others would argue that this pain is something they deserve because they misinterpreted and were basically acting under a misapprehension and miscalculation of risk in the common currency area. And while we may see, again, lending rates to these sovereigns converging around the German Bund, which is the German 10-year bond, which is the benchmark for this market. This may not happen before the Eurozone ends up issuing its own Eurobonds, a big debate raging here in Brussels and in other European capitals. So this convergence may never occur because eventually Eurozone countries may be like, let's just issue common bonds. We're far from it, but maybe not as far as some would say.
Matina, let's turn to Greece itself and to the country. While we know the losses now that in effect will be eaten by the private sector and maybe some of the sovereigns that are holding these instruments, what about the Greek people? How is the restructuring perceived in Greece, and what will austerity mean for the Greeks going forward?
Well, I mean, the restructuring largely leaves the ordinary Greek on the street for the short run unaffected, in the sense that while it does help the country improve its debt profile, actually it increases its outstanding debt. only it does one fundamental thing. It shifts that debt from private sector holders to official sector holders. So Greece, instead of owing a huge pile of money to Goldman Sachs and JP Morgan and hedge funds, it ends up owing still a huger amount of money to the International Monetary Fund and other countries in Europe that have lent it money because it's being banished from the market. So essentially, Greece remains a heavily indebted country. Some would argue a further restructuring is in the offing, perhaps this year or next year. And while we can't speculate on that, this is by no means an end to the Greek drama or the plight of the Greek people.
Will the political and economic reforms that will require or be required of Greece, will those reforms, is there a better prospect for the success of those reforms over the next few months? Or this is just putting off an inevitable second restructuring?
I think we're getting some good signals with regards to those reforms. The first big signal is a readiness by the European Commission, which is essentially the executive arm of the European Union, to stand in and help Greece. There's also a thing called the Task Force for Greece that's manned by international, especially European experts. And all these guys want to go into Greece and help out with structural reforms like labor market, helping with public administration, cutting red tape, making it easier to do business. There's also a very important set of legal reforms and reforms that have to do with the tax system to make it fair and less of a weight on businesses. So there's no reason why we shouldn't expect Greece to rebound and come back stronger from this crisis. The real problem here is, how long is this recession going to last, and how deep is it going to be? It's going to enter its 6th year in 2013.